Good afternoon and happy Friday, everyone. Welcome to Stock Market Today. Ali Corman, Justin Nielsen here with a wrap up of the week and your action plan for what you should do to prepare for another week of trade. We're going to talk about the major indexes and a couple of stocks on our radar. Justin, what do you have for us?
Well, you know what? For as bad as the day was, there were some stocks that were holding up pretty well. So we can just go ahead and take a look at Palantir, Unity Software, and DraftKings that's really tightening up. So we'll get to those.
You're right, Justin. It was a bad day and a bit of an expectation breaker for us.
Exactly.
So here's a look at the Nasdaq Composite on Thinkorswim from TD Ameritrade. The Nasdaq finishing down 0.9% for the day. Same with the S&P 500. The Dow down about 0.5%, and the Russell 2000 slightly lower for the day. But after Wednesday and Thursday seeing those nice upside reversals with support at the 21-day line, the expectation was for that to continue, and that's not what we saw today.
Exactly. And again, this kind of goes to that whole bullish versus bearish outlook for the day. When you start off strong and you end weak like we were last week and like we were at the beginning of this week, that's generally a little bit bearish. Now, on the flip side, what we saw Wednesday and Thursday was, well, we didn't start off as strong, but we closed really well. In fact, on both days, like yesterday, we were down, 0.75%, but we closed in the positive. Not much, but still, that's more bullish. And you would expect it at least to hold those levels that it was getting. The NASDAQ composite was getting back above its 21-day moving average line, bouncing there. The S&P 500 was bouncing off of its 50-day moving average line. So you would expect it to hold those levels. And today, we started off okay, but it just got weak at the beginning and never really recovered. And so it was a weak close. These moving average lines, they're in jeopardy. A lot of stocks that were looking strong on Wednesday, we were talking about steel stocks. We were talking, a lot of the things that were looking strong are just not looking as strong anymore. But on the other hand, there's still these pockets of strength here. It's definitely a stock picker's market. So you could be having very widely different results from your neighbor, but just depending on what stocks you have in your portfolio. Because a lot of the big cap names, Apple and things like that were just driving the indexes down. But you had some of these other names that were looking fine and even showing some breakout activity.
And we will also get to the S&P here shortly. But Justin, does it feel like now that we could come down on the NASDAQ to the 50-day line after support at the 21-day is in question?
Well, you were ribbing me a little bit a little while ago that, that's what I was kind of looking for at the beginning. Was I was really hoping for a pullback to the 50-day moving average line. And, we stopped at the 21-day moving average line. And at the time I was like, okay, look, if this is what the market's going to do, I'm going to play the bounce, even though it didn't do what I wanted. And you kind of blamed me for asking for it in the first place.
Yeah,
And, so, but, that wouldn't necessarily be a bad thing. What kind of is not great about it is that we did have the bounce, and then that kind of sucks you in a little bit. But this is also the reason why we don't plunge in. This is one of those things where you might have been doling out money, and if those stocks were working, then sure, you're going to follow up with some more money to those names or to other names that you see setting up. But we don't go like 100% in it all at once because of this exact reason. If it doesn't work, you don't want to get too hurt. If you're doling it out slowly, then yeah, you're going to take a little bit of a hit, but not as if though you were plunging. And so that's a better way to go. It doesn't have to be all or nothing, but it can be incremental.
Right. And now let's take a look at the weekly chart before we move on here. So now we have two red bars here in a row, Justin, but in the context of a very strong move from the NASDAQ.
Exactly. So it's really important that you always take that step back to the weekly charts as much as possible, so that you don't get kind of lost in the weeds and some of the minutia here. This can especially happen if you look at the intraday chart, which just looked horrible on the index. But when you take that step back to the weekly action, there's nothing abnormal going on here. This is not a market that's completely breaking down or showing huge cracks. This is what is a normal pullback in a market that has been running for quite a while. And you want those pullbacks to happen. It helps you prevent the indexes from getting extended. It gives you new opportunities for new names or for early entries into names that maybe are just taking a small break. So there's a lot of positive benefits that come from these pullbacks. And, two weeks down, even though these are closing at the lows, you can see that there's a lot of cases in which we do close down for a week or two, and then we bounce right back up. So I'm not saying that's going to happen this time. We're going to have to watch the market and wait and see. There's no use prognosticating. It's better to just say, okay, this is what the market is doing. Let me react accordingly.
Yeah. So the NASDAQ at a bit of a crossroads at the 21-day line, and flipping on over to the S&P on MarketSmith here, we can see now support at the 50-day for the S&P in question. And as we've been saying for months on end, this 50-day has been a almost sure support level for the S&P, but that doesn't guarantee that now it will. But in the past, it has.
Right. It's always that one thing when people start talking about it as a sure thing, that's almost like the death knell.
The fail safe. Right.
I mean, certainly what I don't like. What I certainly don't like here is that we did undercut the rally attempt, but again, we're right there at the 50-day moving average line. And you notice, if you just go back to a lot of those tests of the 50-day moving average line, we'll, go under there for maybe a day, close below there. That happens, but then it usually bounces right back. So I think it's too early to necessarily say that this rally is over, because just what's happened in the past is we've had these just tests of the 50-day moving average line and quick bounces back. So I'm still waiting for that test here on the S&P 500. We'll see what happens with the NASDAQ composite as well.
So you're right. The last time we got a close below the 50-day was in mid-June, but followed by a strong move higher. So if we do have another close below the 50-day line on Monday, do you think that would mark a character change, or is just one extra day still not enough to know for sure that this overall trend will continue or not?
Yeah, you can have a couple days below there, and it's not too concerning. It's when you start living below the 50-day moving average line that just comes, and that doesn't even necessarily mean that you're going down in a big way. I wouldn't suggest to anyone that they start shorting the market at that point. Right. What it could just be is that, hey, this might be a little bit more of an extended break. And that's not necessarily a bad thing either. You get a lot of stocks forming their bases during that time. And that can be a good thing because it just, again, gives the market a little bit of a chance to rest and create new setups. So new opportunities often come from that action.
That's right. And to be prepared for every scenario, as you said, we could see a bounce. We could come in a little bit more, but for those running more concentrated portfolios, you got to be agile and pay attention at these key levels.
Yeah. And I think the big thing too is it's beyond just the indexes. You really have to look at the individual sell signals that you might be getting in your stocks. If you've been holding on to something for a long time and it's come down to just the 10-day moving average line, that's not necessarily something to be worried about. If it's plunging below its 10-week line, well, that's something different. And if there's anything that you bought recently off of this, this bounce, then you might be having to trim those things. And that's okay. That's how you keep your losses small. And the best way to avoid big losses is to take some small losses.
That's exactly right. And one other interesting thing to note about Friday's action was the strengthened speculative growth. So ARKK here up over 2% for the day. So those beaten down stocks that were bouncing on Friday amid the overall weakness.
Yeah. And so again, I was looking at some of my quotes and I saw that ARKK was up 2%. I'm like, wow, that surprises me, especially looking at my own portfolio. How are they doing it? And when I looked at what was in ARKK, a lot of the names were up. I think at one point I was looking at all green there, but you look at the chart and a lot of them look like ARKK itself, below the 200-day moving average line, below the 50-day moving average line. A lot of the stocks in there, bouncing off of bottoms. So that's not necessarily where the strength is right now in a lot of these. And you see that relative strength has been suffering, the relative strength line, the relative strength rating. So I'm always very cautious of getting too excited about a big bounce in something when it's just been decimated so much. Same is true of the markets. When you get the markets, some of the biggest days in the markets happen during bear markets. So you just have to be aware, hey, if these stocks are in a kind of their own little bear market right now, you got to be wary of trying to buy on a day of strength where it's kind of, I guess, diverging a little bit from what the other indexes are doing, because that can be a trap. But there are still a lot of names that are in there. Some of the speculative names are names that we are watching as well because they're showing strength. So it's not like it's a full of just beaten down names. There are some stocks in there that do have strong relative strength, and that's where I tend to stick around.
Yes. Yeah, we like to see that strong relative strength. And we use FFTY as a proxy for growth. So down a little bit on Friday. And for the week, let's take a look, up about 1.7%. So after a down week last week, up by about 1.8%, and a little bit of a struggle midweek, growth overall finishing higher. But as you said, still a very stock picker driven market here.
Yeah, just as a point of reference, I keep track of the performance of Leaderboard and Swing Trader, and Leaderboard had heavier exposure, but a lot of the names that they have on Leaderboard, they're names that have been on for a while, and it basically matched FFTY. It was only down about less than 0.5%. So as bad as the indexes looked, there wasn't a lot of destruction in some of the higher relative strength names, some of the names that have been acting the best. So I think that's a good thing. What was getting kind of destroyed was some of the stuff that looked like it was bouncing good. I mean, on Wednesday, we were talking a lot about these steel stocks that looked like they were really setting up. And if you look at SLX, just as an example, SLX, that's the steel ETF, NX steel ETF, that Wednesday bounce is not looking like anything now. I mean, it really reversed there. And even taking the broader sector of materials, looking at XLB, that was one of the strongest sectors on Wednesday, but it quickly lost that ground. So here again, if there's stuff that you've been buying recently that looked like it was setting up, looking like it was bouncing off the 50-day moving average line, but has now undercut those levels, you gotta react to that individual stock's sell signal right there, instead of saying, oh, well, the indexes, I'm going to give it a little bit more time because the indexes are right there at the moving average.
Yes. And let's check in on 3 stocks really quickly here. So Palantir up 0.25% on Friday, and for the week, gaining over 9%. So a strong breakout from this bottoming cup with handle base for Palantir here.
Yeah, and what I like the most about Palantir's action is this was a stock that had a lot of volatility, and that's pretty normal for an IPO stock, and especially one that has such a big move, and it came down hard, but I love how tight it got. It created this cup with handle area, and then if you go back to the daily, you can really see how over the last few weeks here, it broke out and it just really tightened up. And so we actually put this on Swing Trader on Wednesday as it was kind of crossing above that area of resistance, a little bit of a downtrend, and we got that immediate follow up. That's what you like to see. So Thursday's action was very positive. We were seeing it in a lot of stocks. We were seeing it in the indexes. So again, as you said, today was kind of an expectation breaker for the indexes, but Palantir held up very well. So I think that's a promising action. It kind of goes to show you that, hey, look, these aren't all down and out. There are still opportunities out there.
Yeah, and look at all this blue volume here. That definitely stands out to me.
We did have quadruple witching today, so that will kind of that will make the volume higher on today, and that's when not only do you have your monthly options expiring, but you've got the quarterly futures, the futures options, multiple things that are expiring, and that does tend to lead to higher volume. But as you point out, there was a lot of even if you don't count today, you're pointing out that there are a lot of volume spikes in there, and that just gives you extra confidence that, hey, the institutions are stepping up in a big way.
Okay, and Unity, which went public at a very similar time, maybe even the same day, but very close at least to when Palantir did. And it is now in that profit taking zone and holding the 21-day line very impressively along this run.
Yeah, so this is another one where, again, it had all that volatility before. And I'm bringing two recent IPOs up just because I think we had a great discussion on IBD Live today with Eric Kroll. We've had a number of the authors of the life cycle trade, on the show, and they always give such great insight into handling IPOs. This is another one that, had very similar action. It, had this volatile move down, and now it just formed a nice cup with handle, got back above its 200-day moving average line. That was strong, was holding above its 50-day moving average line. And now here it is holding the 21-day moving average line. So it's kind of giving you like a new character. And so far, that character personality trait has been staying intact with these, pullbacks of the 21-day line that it's been able to bounce from, and it looks like it did that again this past week.
Well, with the market hitting turbulence this week, do you think it might be time to take some profits into strength here with Unity?
Nothing wrong with that. So the benefit of taking some profits, again, it doesn't have to be an all or nothing proposition. You can take some profits, that lets you lock some in, but you still are participating if the stock moves higher. And you could use as an example the 21-day moving average line as a short-term place where you could take off the remaining profits. So you're taking some off into strength, and then you could take some off into weakness. Or this is one that now that 50-day moving average line is climbing, if you bought this at the breakout, once that 50-day moving average line gets to a point where, they can't take that profit away from you, it acts as almost like a little bit of a trailing stop. So that's another way that you can be handling this. And this is a stock that we do have on leaderboard. Palantir, yes, as I mentioned, we have on Swing Trader. So that's just another place that you can be getting ideas of how we tend to handle stocks. And so Unity might be one that you're looking at from a position trade standpoint, and it is staying on leaderboard for now.
And let's take a look at DKNG DraftKings tightening up here right around that 60 level, a handle that has formed, and at the 21-day line for now, a nice support level.
Yeah. And, Arusha and I, we co-manage a fantasy football team. Football is back. It's been something to do on the weekends, right? If you've got the time, if your wife doesn't give you too many chores. But, here we have, this was a pretty orderly pullback. You don't see any big volume spikes coming in, nothing that, looks too out of the ordinary. But the last 3 days, man, it just seemed like, again, some pretty tight action here. And this 60 level, if you just kind of draw a line and go straight back on 60, right at 60, you see how there's a lot of action right here. And so it just seems like if it can get above this level, that it could have some room to run here. And of course, with football season and, sports betting kind of, picking up the pace, it does have some opportunities here to show some good numbers.
Okay, thanks for that, Justin. And it's been MarketSmith free access week, and we've talked about it all week long. Justin, any final suggestions from you on what tools you think are beneficial to use from MarketSmith as maybe people take a last chance to check it out?
Well, I think the biggest thing about MarketSmith is it has so much to offer. You have to be careful of trying to drink from that fire hose. So this is why I really recommend people do coaching sessions, or look at some of the educational material that we have. Start off small. We've got the Growth 250. Use pattern recognition. You can be running reports on, hey, show me stocks that are in tight areas or that are breaking out. You don't have to feel like you have to use it all, so that you get your money's worth. Just using a small portion of it can put trades on your radar that will absolutely pay for the product. So, just kind of start off small, get your feet wet with it. And as you expand, you'll get better and better and find more bells and whistles that help you out. And above all, it's just a huge time saving.
It really is.
So that's what it really comes down to.
Big time saver. And we actually do a lot of demos on IBD Live of the
Absolutely.
various features, whether it's screening or pulling up different lists, looking at the stock ideas, setting alerts. Yeah, we do a lot of demos on IBD Live. So
yeah,
hope
David
you join
Ryan
us
just
there.
showed how he, could go through a few hundred charts in a matter of minutes. And I mean, he did that like right in front of everyone on IBD Live, and just kind of showed his process.
Impressive stuff there. All right. And now as we go back, let's pull up QQQ just really quickly and wrap up what investors should be doing this weekend, Justin, to prepare for the week ahead.
Well, for next week, you're going to be looking at your stocks, looking at what levels you think they should be holding at. What is your exit strategy on your stocks, and maybe doing a little bit of ranking and rating. Which of your stocks are the strongest? Which ones do you have the most cushion on? Which ones are you going to be wanting to hold? Which ones are you okay shedding a little bit? Again, Unity software, as good as it looks, there's no problem with shedding a little bit as you're in strength. So trying to make some of those decisions on the weekend, I think, is always a good idea, because you have a tendency to be less emotional when you're not looking at all this red and green that's flashing at you the whole time. So come up with your plan, and then next week it's a matter of trading that plan. Now, a couple of things that you should be aware of, especially on the consumer sentiment side. We're going to have Lennar and KB Homes. They're going to be reporting earnings next week. FedEx, Nike. That will kind of give you a sense, pretty easily of, hey, what are consumers thinking? How is the home builder sector going? How is the shipping? With FedEx, its numbers. And then of course the consumers, are they shelling out money for the shoes? We've seen a lot of the retail names doing well, but it's going to remain to be seen. Hey, can they continue these numbers, and what does the guidance look like for that? And then also, don't forget, a lot of people are watching this whole idea of what is the Fed going to do with tapering. When are they going to start saying, hey, we're talking about tapering and everything? And so the Fed has their 2-day meeting next week. This is a periodic meeting that they have. And of course, the announcement usually comes on Wednesday at 2 p.m. Eastern. So it's just a good idea to kind of mark that on your calendar, because it's a good idea to just see how the indexes react to the news. It doesn't mean you have to necessarily do anything, but just be aware of it, because if you start saying, oh my gosh, what's happening to my stocks? If it's 2 p.m. on Wednesday, it might be because of the Fed meeting. So just be aware that it's there, so you know what's going on.
Yes. So we talked about key levels to watch for the major indexes. Justin mentioned looking at your stocks, looking at the key levels, and trading your plan. All very important. So Justin, thank you so much for that fantastic in-depth analysis. I don't know, it's at the very least been a while since you and I have done a Friday video together. But,
you don't let me do it very often, because I tend to go long. So, but yeah, when you're in dire straits, you bring me on. So I appreciate it.
It was fun. All right. Thank you, Justin. Thank you all for tuning in, and we will see everyone back here next week. Have a great weekend.